Hello everyone, welcome back to our channel. Today let's talk about Petrobras latest quarter and what Goldman Sachs thinks about it. I will skip the heavy jargon and focus on three questions. First, did Petrobras actually make good money? Second, why were dividends lower than people hoped? And the last but not the least, is the stock still attractive from here? Okay, first of all, let's talk about its earnings. Well, the earnings is okay. It's okay, but maybe it's just okay, but not exciting. It's not exciting. Petrobras reported about $11.7 billion, so adjusted EBITDA, right, in the first quarter. Here, right, adjusted EBITDA of 11.7 billion US dollar in the first quarter. In plain English, that's the cash profit of the business before interest, tax, and depreciation. It was slightly below what market expected, weaker than expected, right? But roughly in line with Goldman's own model. Inside this number, there's a bit of tug of war. The oil and the gas production business was weaker than expected. The refining business, the part that turns crude into fuel, did much better than expected. So if you only look at the headline, it feels a bit well. Not a disaster, not a blowout, just a mixed but acceptable quarter, right? Okay, let's talk about the operations. More oil, weird timing. On the production side, Petrobras is pumping more oil. Volumes were up double digit versus last year, and the cost per barrel are still very low, especially in the pre-salt fields. That's actually pretty impressive, right? They are producing more, and it is still cheap to get the oil out. So why didn't profit jump more with higher oil prices? Because of timing and accounting. Petrobras only books export revenue when the tanker arrives at the final destination, and most of their oil goes to Asia with pricing delayed by about a month. So what's the translation about it? The oil price rally we have seen recently will only show up fully in second quarter numbers, not in this quarter. Okay. So let's talk about the cash and the dividends, where investors got disappointed. All in all, below consensus EBITDA and the dividend could drive a negative stock reaction. Well, yesterday, right, the price was going down, but we remain bullish on the reward. So Goldman Sachs still remain bullish on the forward. Okay, let's talk about the dividends. Petrobras announced about 9 billion years of dividend this quarter. 9 billion. Converted to dollars, that's roughly 1.8 billion. 1.8 billion, or around 1.4% yield on the current share price. 1.4% yield. Maybe more, because the stock price has dropped yesterday. So the problem is the market was expecting more, right? Goldman was looking for about 2.4 billion, and the street was close to that as well. So why the shortfall? It's not because the business suddenly turned bad, it's because a lot of cash got stuck in working capital. Many higher inventories and the cargoes that have left Brazil but haven't yet turned into revenue and the cash. Think of it as oil on the water. The barrels are out there, but the money hasn't hit the bank account yet. So the company paid out less this time. The good news is the balance sheet is still quite comfortable. The balance sheet is still quite comfortable. All right. Well, here. Leverage came in 1.4 times. Gross debt came in at 71 billion US dollar, and with cash position of 9.8 billion US dollar, right? Quite comfortable. That is below the company's own selling. Leverage is what 1 and a bit times EBITDA, and then they still hold a decent cash balance. So all of it implied that its balance sheet is quite comfortable. Well, it seems that the information or the logics are not quite good to PRB. Let's take a look at the chart. All right, let's take a look at the chart. Here we go. So obviously, Petróleo Brazil has had a strong upward trend, right? And just broke this upward trend recently, without volume enlarged, right? I think it is all because of the bad news, which just stated in the report. All right. So from the chart, we can tell from the price action that firstly the upward trend is broken, right? It's broken, and now it's going lower, right? We can see that the yellow line, the yellow upward line, is broken, right? And now, secondly, we take a look at the RSI indicators. The red circle implies that it is still not oversold. So there are still some space to go lower, right? The target is maybe $18. Why? The blue line? Can you see that? The blue arrow? Because from the beginning, in the blue arrow, there is a volume enlarge. So here should be a support level, just a little bit more than $18. So we just wait. We wait, okay? With the healthy balance sheet and the expected dividend or cash flow in Q2, I think around $18 could be a support level for the PBR. All right. So this is all about PBR. Let's come back to the report. It's all about PBR, the logic from Goldman Sachs research, and the price action from its chart. So if you have any questions to ask about that, so please don't remember to click a like and join our group and leave the comment. We have one-on-one expert to talk about it. All right. Okay. That's all. See you next time.